Any advice for those younger people looking to get started is find what you're good at and go and amplify that in front of someone.
Welcome to the Fully Funded Show. Whether you're a capital raiser, deal sponsor, fund manager, or LP investor, we've got the insights you need for investing success. Join Sam Silverman each week for expert interviews, insider tips, and strategies to fully fund your ventures. Let's go!
All right, we are back with the Fully Funded Show, this time with Leka Devtha. Leka and I had the chance to meet at the Best Ever Conference this past March in Salt Lake. She was actually the moderator on a panel I was on. I spent some time together there, and she was awesome. So, Leka, super happy to have you on. If you want to give the listeners some context about your background too, that'd be awesome.
Thank you for having me, Sam. You were one of my favorite speakers through that entire conference, and it was so fun to moderate your panel. But yeah, a little background about me. I started investing in real estate 10 years ago. I focused heavily on my local greater Seattle market. I started with huge value add rehabs, and now 10 years later, I do syndications. I buy office, commercial, multifamily buildings. I just love anything distressed. I like bringing things back to life and stabilizing properties. And so I own a pretty sizable portfolio here, and I'm constantly doing deals. And I am a pretty active operator.
Yeah, really cool. So it's interesting. Typically, you don't hear about people doing deals in Seattle. So I lived
Yeah.
there for a bit myself. I know the market a little bit. I think I was there for 8 or so months myself, and understand how high priced of a market it is with
Yeah.
very little supply. So what does it look like doing deals locally?
I mean, it's expensive. I have done deals in Tampa, in Raleigh, North Carolina. My deal sizes over there was like under half a million, and in Seattle, just a single family flip could be anywhere from a million to a million 2.5. So it's just a different ball game. It's more luxury, and even when it's not luxury, it's super expensive. And for someone like me that does everything from single family to larger scale multifamily, like I just made an offer on a $10 million apartment building, to see like what is possible within that real estate space is really cool because our market is financially very strong and we have no inventory, no housing whatsoever.
So I know we were talking before we hopped on here too, because something you're working on now is more of the condo conversion play, which I think in a market like you're in makes a ton of sense because the rent rarely keeps up in a top 10 priced market with how quickly the pricing of housing goes up. So you have that nice spread. So kind of what does that look like for you, and why do you decide to get into that?
Yeah, I just noticed that because of the lack of density and then the price points, like the median price point being so high, we just crossed $1 million in median price point. And that's just unaffordable for someone just graduating or getting their first job or moving to the city for a job. And so I thought it was such a good idea to buy buildings, chop them up, like fix them up, chop them up, and then sell them off separately at a much lower price point. And so I closed on a triplex last week, and I could fix it up and sell the whole triplex to an investor. It would be super turnkey. But actually, by condoizing and chopping it up into individual units, I can sell it to an end user who would, first of all, pay more for it, and secondly, I am kind of solving the housing problem where I'm adding 3 new units that are fully finished and turnkey at a price point that people can't afford to buy today.
Yeah, it's really smart too because especially I know we talked offline before too, looking at kind of projects that are bigger than that 4 unit mark for the commercial side of it for apartments to condos, where if that rent really hasn't kept up, these apartments are valued based in NOI. So the ability to go chop them up and sell them based on actual value to a local person buying it for their home gives you a really nice spread and also really plays into that housing supply shortage there as well. You mentioned, out in Seattle too, like what's that demographic of people look like there in terms of who's there, who's in
Yeah.
this market, who's buying, who's investing?
Because of the like high concentration of tech companies here, we have a lot of early 20-year-olds that are moving to the city or graduating from here. or coming here for jobs like, at Meta or Amazon or Google, that are super savvy. They have a really steady, good paycheck, but there's no inventory for them to go buy. And they want to live in like more urban areas rather than suburban areas. And so targeting those like cooler urban cities, um, and then offering something at that lower price point, I think is just, that's what's going to be a game changer over the next couple of years. As interest rates are super high, pricing is super high, and basically it's bringing down affordability quite a bit.
So are you seeing yourself price at a lot higher per square foot due to the smaller size of the units versus competition?
For sure. Yeah. Plus, with the kind of quality of work that we do, we can afford to price higher because that kind of product at that price point is just not available.
Yeah, it's interesting too. Like, are you seeing it kind of locally, and not to go down a rabbit hole here, but that I actually did the same thing you're talking about. I moved out to Seattle when I was still in tech, working at a large tech
Yeah.
startup, and brief stint, but I was out there, and you definitely just saw a lot of these folks, especially on the more tech. You have two sides, right? You have CNC, customer facing, and coding.
Yeah.
People in that coding world, your comp goes up and up and up and up. So it's really interesting to see that. The sales world, a little bit interesting, more fluctuation, but yeah, it's kind of cool to go see what that looked like for them coming out there.
Yeah, for sure. I mean, it's astronomical how much our techies get paid. And so, for someone that's savvy, and I see this more and more too. I also host a meetup monthly, and I host a meetup just for tech investors. It's called Tech Meets Real Estate in Seattle. So I host a meetup just for techies too. And what I see often is that they are not just focused on making a paycheck, they're also focused on hustling and creating multiple streams of income. And so for someone like that, a house hack, or like, they want to live in one unit and then rent out another unit. And I just went on a contract for another client of mine where his wife and him are like 27, and they didn't want a single family home. Instead, they wanted to live in a house hack. And the property that I ended up buying for them is a duplex. So they get to live upstairs, rent out the downstairs, but it has a huge flat lot in the back where you can build four townhomes. Like, can you imagine the potential of living there and building in your backyard and coming away with a $2 or $3 million profit in a couple of years?
Yeah, it's really cool, and it's cool too. Showing, I know a lot of people who come on this show to go talk to our audience. They're doing these huge deals, and it's interesting, kind of highlighting that the bigger the deal does not mean bigger profit at all, right? I think kind of these smaller deals that you can go do, you can also own a lot more of them too. So
Mhm.
definitely want to get into your meetups and conferences and stuff there. But before we touch on that, like walk me through kind of how you've structured some of these smaller deals with investors, as I think it's an opportunity for folks who kind of highlighting the structure advantages of being kind of closer to the deal that way.
Yeah, for sure. So, for example, I bought a single family house to flip a year ago, and we rehabbed the house. But then the back, like the house was on a through lot, which means there was two streets on either side of the lot. And so we flipped the house in the front, but then we built a dadu in the back. Another huge play in Seattle is the ADU dadu laws that passed a few years ago. And that basically means that if the lot size is over 3,000 square feet, you can put a whole single family house in the back of an existing structure. Of course, there's stipulations like the house has to be under 1,000 square feet. But there's creative ways to make it look really cute, make it a 3 bed, 2.5 bath. And so I ended up putting a whole structure in the back and building a second house on this property, now raising the value of this $500,000 home that I bought to 1.5 million. And then what I did was I sold off the front house, and now I own the back house for no money down. And all I do is put a tenant in there, and then that property is just going to appreciate for the next 2 or 3 years, at which point are we ready to sell it for a lot more. Yeah, so that's just like one of the creative things that I've done in the last year. But there's so many other ones. Like I took a house, I added an addition to it, made it a 4,400 square foot home. It's now on three separate levels, and it's not a triplex, but it could be used as a triplex. So I have it on Airbnb, and they each rent out separately. They each rent out as a whole, and we just make income of 10 to 15 grand a month, where my mortgage on it is like 3 grand a month.
That's really cool. So to go into the kind of the ADU piece of it, so if you're putting an ADU on that lot, do you legally have to go subdivide those in order to be able to go sell it off, or kind of how does that work, like structure wise?
Yeah, so there's a lot of legal stuff that has to go through. First of all, we need to do a survey. That's a survey plots exactly where the structures are on a piece of property. And then you have to do something called a condoization. So it's like a subdivision, but it happens much faster. And then you have to put their own HOA, an HOA that is specific to this property, that kind of manages the common areas of both structures on the property. If there's four structures, it's like a short plat, long plat, whatever, but it has its own HOA. So all of these things happen. It has to be recorded with the county. There's a public offering statement. So it's its own ball game, and there's a lot of attorneys that just deal with this, that are really savvy about how to condoize deals now that it's been in the making for a few years.
So walking through the numbers on adding an ADU to a property, right? So if you're saying you can get up to 1,000 square feet, I assume you're going right up to that 1,000 square foot mark as close as you can get in order to go maximize the house itself. So like walking through the numbers on putting a 2-2 or a 3-2.5, which seems tight in square footage wise, but kind of walking through the logistics of that.
Yeah, so it's you can actually go up to 1,089, but on paper it has to be 1,000 square feet. So it could be like a cottage style home where there's a single bedroom, bathroom, and a kitchen on the main floor, and then two bedrooms and a bathroom upstairs. Or like the one that I built was a really nice ground floor story with a kitchen, a living space, and a seating area, and then upstairs it's got vaulted ceilings, two giant bedrooms, and two bathrooms. Um, and the price of these to build is anywhere from $300 to $380 a square foot. So you're spending about 380K. But if you think about it, if you're also fixing up and selling off the house in the front, then you're practically getting the land for free. That house would have cost you 500-600 grand to buy anyway. But if you buy it, like I bought the house for 560, I fixed it up and sold it for 675. And once that was sold off, I got my back house, because it also, like, once it's built, it appraises for about 750 or 800. And if you can get 70% loan to value from a lender, then you basically get all of your cash out, and you get to hold this property with no money of your own.
Yeah, it's really cool. Seattle, parts of California, I feel are pretty similar as well in terms of these higher priced areas that have just shortages of housing. So really cool option to go look at if you're an investor looking to go kind of break into the space and don't have a ton of cash to go play with, but want to really go maximize your dollars and be in control. A great option for you. I do kind of want to shift gears to how you've actually gone about raising capital. I know for you, personal branding is a really huge piece of it, right? Tied to being involved in bigger pockets, to doing meetups. So kind of walk us through what that looks like for you in terms of how you went about building your brand and how you go leverage that brand to go raise capital for deals that you bring investors into.
Yeah, absolutely. So a few years ago, about 6, 7 years ago, I just noticed that in my city there was not many really good meetups that added a lot of value to investors. And so I started one. And what started back then is thriving today. We've never missed a month. Even during COVID, we went online, we were on Zoom. So we never missed a month. We've got amazing speakers. And the whole focus of the meetup is just giving back to the community. Like tomorrow night, we're doing a community for community meetup. It's a free meetup, this one. We have 7 speakers talking about 7 different topics in 10 minutes. It's like a speed networking kind of meetup. And we just have our community come and network and listen to our speakers, and they add so much value to the speakers, and speakers do the same. And so just doing all of that, I got super involved with Bigger Pockets. I ended up emceeing their entire conference in Orlando last year. And it was just like such a huge moment and such a cool experience for me. Like, I never in a million years thought I would be on that stage, let alone MC that stage. So it was just really cool to have 3,000 people, like all eyes on me, and I was the MC. But I've seen some great opportunities just come my way because of me putting myself in front of these big groups. So the way that I also raise capital is through a lot of it. So it's really hard for one individual person to, have such a large audience if it wasn't for social media. And so the way that I do that is, just putting out great content, um, and then the cool thing is, like, because my city is so tech heavy, there's a lot of tech companies that have their own individual real estate clubs. And if you're anywhere in a city with large tech companies, you should go find out if they have their own real estate clubs. Because what happens is, all of these people, whether they're in medicine or tech or sales and marketing, they want to own real estate, and they can't do that outside of their W-2. And so they form these groups within their companies where the groups then invite speakers to come speak to them. So I've done presentations at Netflix, at Intel, Meta, Google, Amazon. And it's cool for me to go and get in front of this super uh, intellectual audience that is also high net worth. And in turn, what happens is, when they see that I am a credible source that is actively doing deals, not just throwing stuff on social media, but actually, walking the talk, then they want to invest with me. And so that's how they then, start following me and start investing with me. So then if I have a project and I'm looking for a private lender, I just go back to my network and say, hey, I have this incredible project. These are my projections. This is what we're going to do. And most importantly, I have the track record to say, look at all these projects. I've been involved in more than 100 real estate transactions where I'm the active operator. And so just, say, hey, look at my past transactions. And then it's super easy for someone to make a decision on, yes, I want to invest with her or not.
Yeah, that's really powerful. I think a note for everyone there too is keep a track record of the deals you've actually done,
Mm-hmm.
right? With performance metrics. I get asked this pretty frequently from investors as well, is having that handy just shows, one, you know your stuff, two, you've done well, and three, you're actually organized. And I think it's a really smart play too, is like getting in front of these people at scale that if you look in the room of, any of the companies you mentioned, I'd bet heavily that most people there are accredited, right? In terms
Yep.
of the roles that they're in at these companies, right? Like you can typically tell if someone's been at a company like that for a few years, they're at that threshold, if not well past it, depending on their level of seniority. So a great opportunity to go network with folks and kind of just show your expertise before making any kind of asks. So really cool getting involved there. And if you're listening to this too, like find those areas that, be the one person who's doing real estate there. Like if you're
Yeah.
looking to go raise capital, don't go to a real estate conference, right? Go get yourself
Yeah.
involved with these local groups that, have access to people who like the ideas, but don't have the capacity themselves versus going to a real estate conference.
Right.
So on, your end, kind of how do you work on really building your brand organically? Right. I kind of know where you are today in terms of the bigger pocket side of it, in terms of the meetups, but before that, like what did that look like for you and kind of getting off the ground?
I mean, honestly, it was just a lot of like doing the work, buying large deals, like crazy deals, and then actually putting in the effort and the work. Because if you put in that work, that's something that no one can take away from you. Because you actually did that. It's your experience, it's your sweat equity, and it's your hard work. And time and again, I bought properties that just required a full gut renovation. So I would take everything down to the studs and then just like, fix it up with engineering, architecture, seismic retrofitting, which is a big deal in my city. And as I started doing my projects, I would invite people to just come walk it with me. Like, hey, I'm going to be at the project, throw it on my social media, say, I'm going to be at this project. If you guys want to come, let's walk it together and I can explain the deal to you. And I can explain what I'm doing. I had no intention of raising capital. I had no intention of, working with someone. I just did it because I wanted to educate people. So the only thing that I thought about and I wanted to do was add value to someone. Like if someone can emulate what I'm doing, then more power to me. And so I just went with no agenda. And when I spoke to like a Microsoft club or an Amazon club, I would say, hey, I have this cool flip. If you guys want to come see it, let's walk it together. And I would have 60 people that showed up. And when 60 people show up at your job site and they're literally looking at your ideas coming to life, of course they want to invest with you. Of course they want to work with you because they can touch and see and feel your product.
Yeah, it's really smart. I think the getting people to actually see what you're doing in person, just a whole different level of relationship building and credibility, as this is actually what we've done. Right. So like that's
Right.
huge in terms
Yeah.
of, one, documenting that process is what you're doing. But
Hmm.
the better route is even if they can go see it in person, like that is awesome.
Right.
So um I know you mentioned a lot of full gut jobs and operations and kind of that construction work has been something you've really put a lot of effort and time into. Like, how do you think about kind of taking on projects that are a bit more hairy?
I feel like that's all I do is take on projects that are hairy. um, I always say that, how much room do I have to fail? Not to succeed, but to fail. If I have enough of a spread to fail, and if I push through the boundaries and actually make it work, then I have a huge profit spread at the end of the day. And so I take on projects that need a lot of work. My most recent flip that I'm doing now, we just finished demo this week and we're starting framing today. That's a 350K rehab. Most people don't even put that much money for capex on a $10 million apartment building, but that's how much money I'm putting into a single family house. So I'm taking it and essentially doubling the value of the house. I'm building a garage, I'm adding a driveway, like I'm literally creating a product that is so luxury, but that is not new construction, but it almost looks and feels like new construction. So the value is a lot lower and more affordable.
Yeah,
Like
I like it,
every-
especially
yeah. When you lived here, I don't know if you went to Ballard at all.
Ballard. Yeah, yeah, yeah. So I think at Ballard,
So
then I
you know
lived in
how
Green Lake for a bit.
Oh, yeah. Perfect. So, Ballard is super gentrified, very cool neighborhood. It's where everybody wants to be. So I bought this property like 4 blocks from Market Street. And what's cool about it is all the new construction homes around there is selling for 2.2 to 2.5. Whereas my single family flip is going to be 3,000 square feet and listed for 1.8.
Yeah, I'm sure the quality itself isn't a far swing. Even though it's
Mm-hmm.
not new construction, it's still all new inside, right? So
Oh,
I think a lot
yeah.
of people are okay with that, right? And kind of in terms
Right.
of saving that, big spread on stuff like that. But I really like how you phrase that when looking at going into a project as your buffer room, right? In
Exactly.
terms of how many things can I get wrong and still be, at or around my projections. If I don't get those
Mhm.
things wrong, we've got a ton of upside. Like I love that kind of looking at as the safety net with kind of how you talk to investors and also just how you think about it yourself too with your own capital.
Right.
So kind of what's next for you in terms of what you're working on in terms of deals you're looking at or pipeline or kind of personal projects like branding wise, like what does it look like for you?
Um, I'm about to start writing a book, which I'm really excited about. Um, and also, I don't know if I can say this, but so I don't know, but I'm maybe on TV soon, which is exciting. And then in terms of projects itself, I am such a big believer in just being super creative. So the more creative I can be with a project and have multiple exit strategies, I just wrote a LinkedIn post about it yesterday, is finding multiple exit strategies on a single project. The more creative I can be with my exits, the better it is for me. And so just finding deals that kind of fit that criteria where I could sell it if I wanted, but then if I wanted to just hold it long term, is it going to cash flow, appreciate? Is it going to need a lot of my own capital? So just looking at different deals, and kind of hedging my bets. That's what's on the horizon.
Got it. Very cool. So before we hop off here, for investors looking to get started, right? Kind of what advice do you have for someone who's looking to go be more active, similar to yourself, and kind of taking down these more single family or small multifamily type projects right now? What
Mhm.
advice do you have to someone looking to get involved in stuff like that?
So fortunately or unfortunately, it is a tougher market to get into, just given the landscape of interest rates and whatnot. So I often tell people that, look, the best way to get started is by finding a mentor. Finding a mentor local to you, someone whose projects you can go walk, someone who you can add everyday value to. I think the best mentors I found in my life are the people that I said, I don't expect anything from you, but I want to add value to your business. How can I do that? So giving myself up. Like, if you don't have capital, you can put in sweat equity. You can go take photos of the project. You can go project manage a deal. You can just learn about the market. What markets, micro markets are so different. And so, like, how does one differ from another one? Getting really good with the education piece, and then coming out and meeting people at conferences, networking events, doing podcasts like this, just sitting down with Sam and like talking to him for an hour is just so refreshing to me. And I learned something about him, he learned something about me. So just forging strong relationships like that is the number one way to get started.
So on that note too, right? What's the best way to go for someone who's looking to go, work for someone else or intern somewhere? Like, what's the best way to go get someone's attention to go do that? Just because I see it a lot on my end now, right? And we have a lot
Yeah.
of, whether college students or people looking to go break into the space, and they'll reach out and say, hey, happy to help. How can I help you?
Yeah.
And for me, I'm sure probably you similar, it's like, okay, this is now not like your free work is not cheap enough because it ties to me having to give direction to those things as well. So I
Yeah.
think there's a right way to do this. Curious your take on the best way to go do this for someone looking to go, get someone's
Yeah.
attention.
So it's funny you asked this question because I have been working with my underwriter and really my right hand person in my company. And I've been working with him for 4 years. And the way he found me was off my Bigger Pockets podcast. I had 5,000 people reach out to me, and he was the one person that stood out. And what he did was he built a bot. He's a computer science major, and whiz. So he built a bot to go scour the internet for listings that fit my Burr criteria. Like, hey, she's looking for rentals with so many bedrooms, bathrooms, that cash flow. And then he started sending that to my inbox. And then he just sent me a follow-up email and said, hey, I know that you said on your podcast you were looking for these kinds of deals. So I built you a bot to automatically do that. Any new listing that comes up, it's going to send you an email to your inbox. And I was like, wait, who are you? And how can we work together, basically? And what started back then as, okay, you can now shadow me. Today, he is my partner on most of my deals. And I introduce him to my network that gives him a million opportunities. And he is like a fund manager. They just crossed their $10 million in the fund. Like, he got all those opportunities because of the network I put him in front of. And I put him in front of that network because of the value add he brought to me. And so I think any advice for those younger people looking to get started is find what you're good at and go and amplify that in front of someone. And find really good mentors too. Like, you can't go do that to, like, someone who's doing a deal a year. Like, it has to be someone that is really like in the thick of things.
Yeah, I mean that you can't do much better than that, right? In terms
Right.
of seeing a need, going on actually going to help solve that need, and then making the ask, right?
Mhm.
Like that is the blueprint in how to get someone's time, where it's a
Right.
clear mutual value add, and I'm sure in doing so, that person earned your time and trust very, very quickly. So
Right.
take the level of effort, right? Like go figure it out yourself and go try to go do something productive and then go show it to that person, right? Go bring to them with an idea versus just saying, hey, how can I help you? That's not
Right.
helpful usually, right?
Exactly.
So awesome in terms of that person, good for them. Really cool on the fund manager side of it too. Before we hop here, what's the best way, kind of how and why should the listeners reach out to you?
Okay, why you should reach out to me is because I'm always putting out really creative content on just the projects that I'm doing. And then how you can reach out to me is either through LinkedIn or Instagram.
Okay, very cool. And we'll link those in the show notes as well. But
Awesome.
Leka, thanks for coming on. It was awesome.
Thanks, Sam. Thank you for having me. This was awesome.
Thank you for tuning into the Fully Funded Show hosted by Sam Silverman. If you are enjoying the content, let's take your journey further in the Fully Funded Mastermind. The Fully Funded Mastermind offers more than just insights. It's a mastermind community designed to solve the real challenge of raising capital. By joining, you gain direct access to strategies, coaching, and a network dedicated to turning your financial goals into achievements. Don't let capital raising be a barrier to your success. Visit fullyfunded.capital to explore how our mastermind community can pave your way to financial growth.
Thanks for tuning in to the Fully Funded Show. If you enjoyed today's insights, hit follow, share with your investing pals, and drop us a review. Connect with us on social media for bonus content. Your success is our mission. Keep those funds flowing. See you next time.